Nigeria's petroleum sector is showing renewed momentum, with the downstream segment posting 19.4% growth in the third quarter of 2025, a sharp turnaround from average declines of over 35% in previous years. Let's dig further now on this data with Mr. Bismarck Rewane, MD, CEO of Financial Derivatives Company, and he joins me right here in the studios. Great to have you, sir. Good morning.
Good morning.
Fantastic.
Nice to be here. Right. Good.
Yes, sir. And it's yeah, you did promise us a dirty December.
Yeah.
And I guess it's shaping up
It
somehow.
It is. It is.
To be that.
Starting early.
Starting early. Exactly. All right. So looking at this data, 19.42% in Q3 2025. That's the downstream petroleum sector growth. Yeah. At this point, how surprised were you?
No,
about this data?
I wasn't surprised, but the truth is that 19.42 growth in Q3 for refining. What was it the corresponding period last year? It was minus 30. So when you add the two together, the petroleum refining actually grew by 50%. That is huge. Not only did it grow by 50%, it was consistent. That is from that point last year to now, there have been at least 9 different price reductions by the Dangote Refinery, right? So we had a sector that was in the doldrums. In other words, we had 4 refineries that were not working and some modular refineries that were finding their feet. Now, all those are back. So when you compare the production and the growth this year compared to what it was at this time last year, it's actually 50% growth, and that is massive. Now,
what are the drivers, at this point?
The major driver is that the Dangote Refinery kicked into action. 2, because of that, the Nigerian NNPC refineries also woke up, and the modular refineries also woke up. So when you take the aggregate, you find that the sector actually grew massively. But that was not the fastest growing sector, but it's worth noting. But what is more important about anything else is that the sector has very serious linkages, because you look at downstream sector, and the downstream sector, you have the petroleum sector is made up of 3 major segments: exploration and production, which is upstream, where you have deep water, offshore, and land and swamp. That is there, and then of course you just announced in the budget that the budget is estimating that we'll be producing 2 million barrels a day.
2 million barrels
a day, but
that's a big number.
That's a big number. It's very optimistic, but you never know what happens. Right now, the next thing is that you have the midstream, and then the downstream where the refining is taking place. Now, the linkage is that when the petrol price comes down, it has a major impetus in terms of, as you can see here, that's downstream: refining, distribution, retail of petrol, diesel, aviation fuel, and lubricants. So the sector side is about $7 billion. Average growth rate has been, over the past 5 years, has been minus 35. So when you have minus 35 as the average growth rate over the last 5 years, and all of a sudden you are up 20%, right? Then that tells you a lot. Recent average growth has been 15.57, but you have key players: NNPC, Dangote Refinery, and independent marketers. High volume, low margin. So this is not a game for the faint-hearted. These are for the big boys, right?
For the big boys.
Absolutely.
Right, and looking at the key players at this point, it's not been really a rosy relationship.
I know.
Between these players this year.
No, there's competition, right? But after a while, competition becomes co-opetition. That is, you have to cooperate and compete. But one thing is clear: Dangote Refinery is the price leader. Dangote Refinery is using a hub and spoke strategy, that is refining here and producing all across West Africa, selling across West Africa and Central Africa. So it's a major player on the African continent. And what is more important, he has guaranteed that he'll be doing 50 million liters a day and doing 1.5 billion liters for the month of December and January. So one thing is clear, that in the month of December, there'll be no queues, there'll be petrol across, and even diesel at the same time, aviation fuel. So that is not what we're used to. Normally, we have celebrations, but we also have queues. Now, we will have celebrations and no queues, so it will be double celebration. That's called dirty
December with no queues at this point. Maybe some traffic.
Oh, yeah, that's fine.
We'll take traffic.
Oh, yeah. But let's not have queues.
Exactly. Let's not have queues. So, looking at the Dangote Refinery at this point, there's also projections that it's going to even produce more.
Yeah.
And even grow bigger.
Absolutely. You see, it's expanding to 1.4 million barrels a day by 2027-28.
Right.
And again, like I said, the hub for Central and West Africa is guaranteeing 50 million liters daily and 91% estimated daily demand of 55 million liters. So what are we getting here? We are rather than exporting crude, we're exporting refined products to the whole of Africa. So you are getting the take for Nigeria is much higher. But what is extremely important to note is that there has been what they call discriminated pricing across the whole of Nigeria. For once, as we go into January 2026, we are going to have uniform pricing. And then the big thing is about the trucks. The 5,000 trucks he has, actually distributing across the country efficiently. And that reduces price discrimination across various sectors. So what you have is that whilst in Maiduguri they were selling petrol at X, and in Sokoto they were selling at Y, and in Port Harcourt they were selling at Z, everybody is going to be selling at the same price. And that uniform pricing actually brings about efficiency and makes companies more competitive. I think that is very important to note. But you see, we also had this question of the, the 15% import duty to protect local manufacturers. That has been put on hold for a while, but it is important that the government has to revisit it so that you protect local industry to grow. This sector that was growing at minus 35%, all of a sudden is growing at plus 20%. And so what you want to do is to accelerate that, and so they can take advantage of it. So you bring back that protection and ensure that there are milestones that if you are protecting the industry, they must deliver so much in growth, so much in investment. But I want you to go back. You talked about the Nigerian Stock Exchange just now going into green. Huh?
Right.
What is being, the Dangote Refinery is going to be listed in 2026. And from just back of the envelope evaluations, we are talking about almost about $40 billion market listing. The Nigerian budget for this year, for next year, is $37 billion. That is the whole of Nigeria. Federal government of Nigeria spending $37 billion. The value of this investment, right, the stock market capitalization of this investment is going to be like almost $40 billion, more than the Nigerian budget for 2026. That's a very important point to take note of.
That's quite incredible.
And so if you list it, it also has the impact of almost doubling the market capitalization from what it is today, because NNPC is also going to list. And so we are saying the market capitalization, which today is about 92, 93 trillion naira, I don't know what it is, it's going to go all the way up to 240 trillion naira. And that's huge. That's huge.
Even in dollar terms.
Oh, yes.
That's a lot of money.
It becomes the second largest market, stock market in the whole of Africa. I think that's important. And it's a signal that the more democratized the ownership, the more people feel that they're benefiting from the goods, from the upside, but also they are sharing the prosperity of the nation. That, just like when MTN was small, very narrow ownership, now it's broad-based. So when they declared their dividend, you saw what happened. The market was euphoric. So that is what's going to happen when this goes on. And then, you now go on to what the impact of Dangote's increased production from 650 million barrels to 1.4 million barrels a day, what it will do to the economy as a whole in terms of growth, in terms of employment, and bringing down the price, because inflation is linked to the price of logistics and petroleum products. So if that happens, everybody benefits, the government benefits, the economy benefits, and the people benefit.
Right. And talking about benefiting, at this point, definitely you did mention the linkage between, petrol logistics and, the price, and also what we have to pay, at the pumps at this time. It's still a major bite. Now, I bought fuel this morning, and it pinched me a lot. This morning, I'm not going to lie. When do we see prices that don't pinch when we go to the pumps? How many years? I know it's market-driven, but
no.
I'm tired of the pinch.
No, let's take it. You see, when we're talking about economics, with micro is you and I, persons. Macro is everybody together. If Nigeria's productivity, and you are projecting 4.7% growth in 2026, right? If we are growing from $250 billion to a higher level and productivity increases, you will find that, generally speaking, your income should increase. So there's what you call price inflation and also wage inflation. So if the economy is actually beginning to grow, then everybody should expect some wage reviews as we go in, as well as productivity. So that's the second part of it. But one thing I want you to note is that before now, at this time, there were subsidies being paid, people were buying foreign exchange to bring in refined products. That has stopped. So one of the reasons why the economy is probably doing better now is because the Naira has been appreciating. And it's interesting that the budget this year is based on a value of 1530, right? So it means that we've seen the Naira, before that, which was as high as 1910, it has now come down to 14 something. Now, because of this local production, we are beginning to see Naira strengthening, together with the price of petrol coming down. Generally speaking, that should actually begin to translate into higher value for the money in your pocket. So it's not just the wage, but you see that sometime last year you were buying petrol about 1,100 a liter. Now you're buying it at 920. It is expected that it probably come down. It came down anyway before to 841. So if it comes down to, say, 850, right, sometime next year, that's money in your pocket. Right. And then maybe you go to fewer places rather than driving around in the old town.
The Oliver Twist in me is looking for maybe around 300 per liter to 400. That's the Oliver Twist. No,
you wait for a long time.
Yes.
That's not going to happen.
Wishful thinking.
No, because across in Benin Republic and Ghana, they're paying $1.2 per liter, right? Now, we are paying about 76 cents per liter. So if the guys in Ghana, in Cameroon, in Niger, and Benin Republic are paying $1.20 for a liter, and we are paying 76 liter, you are ahead of them. Right?
Maybe my problem is I'm still trapped in the former prices.
No, we can't be trapped. We have to look at the future is what is more important than anything else.
No problem. So what are we seeing? 2025 is rounding up, at this point. What are we seeing in 2026 for this industry? Do we still see the big players still have the little, tension, between them, or is that behind us?
The price war is going to continue, right? Because what's happening? If the price of oil globally, I think that's what we should expect. I saw that $63 a barrel, which was
for Brent.
budget. And the budget is based on $64 a barrel. I don't think that's realistic. I think that we should prepare for $60 and below, right? Because everybody is saying that we're going to 55. Once the Ukraine-Russia settlement takes place, the price of oil is bound to drop. In fact, today, Putin is visiting Modi because he wants Modi to buy some of his oil, right? So let us assume that the price of oil drops to $55 a barrel. Nigeria is going to be hard put. So even the importers are going to bring in, the price is going to drop, but our own oil revenue will drop. So we have to deal with that challenge, right? And that is why you find that the budget of 2026 is cautiously realistic. I don't want to use cautiously optimistic. Cautiously realistic because there are going to be some hard choices that Nigeria has to make. And so if that happens, more stable fuel supply right across the country, downstream sector will boost and there'll be spillover effect into manufacturing and logistics. Total logistics cost of companies' operating costs is about 28.1. If that comes down to, say, 15%, you find that price goods by Nestle, by Guinness, Heineken, Dangote, Boa, all of this. So what are the companies that you have? Boa Foods, you have Dangote Cement, Boa Cement, Guinness, Nigerian Breweries, Okomo Oil, Presco. So there are some good days ahead for the stock market. So
fantastic. Fingers crossed at this point. And for those on the sidelines, not in the market yet, I guess it's time to start looking for position.
Yeah, but
before all of this big.
Not a dead cat bounce.
Santa Rally.
Yes.
Looking forward to that. Thank you
Absolutely.
so much, Mr. Bismarck Rewane. Always great having these conversations with you, and thank you for an interesting 2025 so far.
Absolutely. Thank you very much.
Thank you, sir. All right, we'll take a break now. When we come back, we'll look at it's an interesting day for banks. You know, it's actually International Bank Day. You know, that's celebrated globally on this day, 4th of December. That started, I think, 2019. We'll unpack what that means for the banking industry in Nigeria and globally. That's in a moment. Just stay with us.